Concern over the cost of AI sends the Nasdaq reeling. Welcome to Market Insight, I'm Thomas Warner. The tech-focused Nasdaq's on track for its lowest close in over 3 weeks after Microsoft and Meta both reported rising AI costs. It had finished Wednesday at a new record high. With 2 more Mag 7 earnings to come after the bell and an unpredictable election to come next week, it's no surprise that the VIX Volatility Index jumped on Thursday, hitting its highest in 2 months. Well, with me to help make sense of it all is Peter Andersen. He's the founder and chief investment officer at Andersen Capital Management. A very warm welcome to you, Peter. So the Nasdaq was last down around 2.3%, at least last time that I checked. Do you think that the market's been surprised today to discover that all this AI is actually going to cost some serious money?
It's interesting that it always focuses on the earnings season to talk about or to worry about the expense of AI. But this is an expense that is with us not just when a company reports earnings, but the entire cycle of a company's lifetime. And I do think that what's happening, especially with Meta, is investors are focused now immensely on the huge amount of capital expenditures that Meta has claimed they're going to spend on these build outs, upwards of 40 billion this year. An amazing number. And I think investors are starting to now wonder, well, what will we get from that 40 billion? How is that going to translate directly into earnings improvements? And I think that's what we're worried about today.
Do you feel like it has been an overreaction so far, Peter?
I think it has been a reaction that has been condensed. If we were to continue, I'm always thinking about this every day, but unfortunately, I think a lot of investors only concentrate on this when a company has earnings announcement. But this has been known throughout the entire period of Meta when they're talking about their AI build out. So I don't think it's an overreaction. I think it's a delayed reaction from having no reaction for the past 3 months, for instance.
So do you think if you're Apple or Amazon now, you've got your earnings coming out after the bell, do you feel like you're walking to the gallows at this point?
It all depends on the way they describe their rationale for investing in artificial intelligence. What's happening is time is not their friend in terms of this build out. You have to have explicit examples to give to your investors as to how every dollar you spend on AI, how is it actually going to be translated into cents, say, on the earnings? And these companies have been woefully inadequate in handling that. It actually surprises me that they're not more articulate about how this is going to translate directly to the bottom line. If they did that, I don't think we would have sold off today, but there's a lot of remaining questions.
Well, let's take a slightly more positive interpretation just momentarily, Peter. Yesterday, when we heard from Microsoft, or perhaps I think it was Tuesday after the bell, certainly the market reaction was on Wednesday, we heard from them that they were actually starting to see some of the benefits in the bottom line from all the AI. So there is a good story there if they're willing to tell it, isn't there?
If they're willing to tell it. But I would also say, even with Microsoft, it is a little bit squishy, let's say. It's not a firm story where they actually show you the numbers. It's more of a qualitative description. And while that could sustain investors at the early onset of spending for AI, I'm predicting that as time goes on, there will be even more pressure on the CEOs to explicitly explain, not be squishy, but be quite firm in their answers and giving us tangible, accountable results as to how the current amount they've spent is already translating into benefits for them. They're saying that, but they're not really giving explicit examples.
Well, MasterCard had their earnings out this morning. They were not squishy by any means, very positive, and that positivity was attributed to strong economic growth during the third quarter in the US. Is it mission accomplished for the Fed, do you think?
That's a whole other topic, and I will tell you it's as complex as the AI build out. I'm of the opinion that the Fed does not need to tinker with rates right now. I'm in a very unpopular opinion, I might add. Most are expecting another 25 basis point rate relief or rate cut. And I think the way, especially with MasterCard, things are showing that they're just perfect right now in some of these sectors. Yet the Fed feels compelled to tinker. My advice to the Fed is don't tinker for a couple of more months. Let's see how this all plays out. Let's see if MasterCard's results portend the results of other companies. But for now, I still think we need more time. But as I said, I'm in the minority on that.
So we've spoken about AI and the Fed now, so perhaps there's one more hot potato that I can throw at you. It's the election. What are you expecting in terms of, if not the outcome, the market reaction to whatever result we get?
Sometimes with market psychology, we expect the worst to happen. And ironically, sometimes nothing happens. So, what I'm expecting is whatever the surprise is, and indeed, either side is going to be a surprise because I'm sure you've seen how close the polling is. So, my prediction is the market will probably not react as much as investors are anticipating. And even if it were, if say I were anticipating that there would be a change, I'm not sure that I would make any changes in the portfolio because it is still so hard to predict whoever wins, how that will impact every individual security. So I would say most investors should just maintain their course, be perhaps surprised as the rest of us will in terms of who wins, but I don't think there will be increased volatility the way most investors are anticipating.
Thank you, Peter Andersen from Andersen Capital Management. That is Market Insight. Don't forget, you can watch more videos on Reuters.com.